It's time for the Property Podcast, where every week tens of thousands of property investors, new and experienced, join together to get news, knowledge and laughs at our expense. With me, Rob Bence.
And me, Rob Dix. Join us every Thursday morning for your weekly dose of property ideas and motivation. Then head over to our website at thepropertypodcast.com to keep the conversation going. Now though, let's get started.
Hello everyone and welcome to the Property Podcast. It is episode 117. I'm Rob B. With me is Rob D. Good morning, Rob. How are you today?
I am very well, thank you, Rob. How about you?
I am splendid, thank you very much. Splendid.
So today we are going to be talking about something we don't know much about. Nothing new there. Haha. We're going to be talking about commercial property. Not something that either of us have done, as far as I know, Rob, but something that we get asked about a lot. Therefore, we are going to give away very much a beginner's guide to help you decide if commercial property is right for you. That plus all of the usual gubbins you've come to expect with the Property Podcast in the next 25 minutes or so.
Absolutely. And as you know, if you're a regular listener, we always start with a news story. And this week it's from the Daily Mail. And recently, if you've been following, the Daily Mail has been very big on buy-to-let. A lot of focus, a lot of articles, a lot of features on the buy-to-let industry. And Rob, you've picked one out in particular to feature this week.
Yeah. I'd be interested to know what you think about this one. I found this one to be a particularly strange Daily Mail story. Lots of Daily Mail stories are quite strange. This one is all about how to build a rental home empire. Why stop at one property? Oh, I've just noticed there's also a massive typo in the title. But yeah, basically, it's the kind of article that you'd really expect to see in the, right in the height of a property boom. Basically, people talking about how they've built up portfolios by having a place where the value's gone up, they've remortgaged it, built another one, basically making it a whole thing sound really easy, like the kind of thing that anyone could do. And I just found it really strange, the timing of it, because we are only a few years out from the last crash, and like I said, it's the kind of thing that I'd expect to be seeing just like in the lead up to the boom and then the crash. And I noticed as well that the Daily Mail has launched a special buy-to-let section of their website, so why they're pushing it so hard, I don't quite know. It's a bit of a strange one. It's
interesting. You're right. It's not just the Daily Mail. Channel 4, I remember leading up to the last crash, every single night there'd be a property-related programme. There just seems to be more and more property programmes out as well at the moment. So it seems to be gearing up. I'd say it's this year, 2015, that it's the first year this has really happened. There's always been property programmes before, but there just seems more of it. And the Daily Mail giving it this particular focus, and the Daily Mail in the UK has the second highest readership, so there's a lot of people who are going to be seeing this. It's going to be interesting. The herd could be coming soon, potentially. That's what you could read into this, and that's when you've got to watch out and don't get caught up in the madness. You've just got to make sure you make sensible investments while the herd will buy anything. The fact you're listening to this shows you're already ahead of the game and you're already focused on learning and already ahead of the curve and therefore ahead of the herd. So I wouldn't be overly worried if you're listening, but it'd be interesting to see if this continues for the next few years, whether we do enter a boom or not. It's certainly a boom-like article. Yeah, I agree, Rob. It's an interesting one, but the media in general seems to be certainly giving a lot more focus to buy-to-let on the whole.
Yeah, it's very interesting. It caught my attention for that exact reason you just said. It's like, is the herd coming? And I'm someone who likes to generally do the opposite of what the papers are telling me to do, and it tends to work out quite well. So if they're telling everyone to get into buy-to-let, do we need to be a little bit more careful with what we're buying? And as a bit of an exercise, in this article, they actually recommend a couple of potential investments. If you've got a buy-to-let calculator that you use, have a little run through and see if you can make their examples stack up, because I really can't. And it just shows the importance of educating yourself by listening to podcasts like this and reading forums like the Property Hub and all the other sources of information out there, because it will allow you to make better investments than what the mainstream media recommend. But speaking of making investments, we talk about residential property for probably 99.8% of the time. We're going to try and redress some of that balance today by talking about commercial property, a massive asset class that we don't give a lot of attention to because it's not something that either of us do yet, but it's something that comes up all the time. It's something that you should be aware of. So we're going to have quite a basic entry-level discussion about commercial property today, to help you decide if it's something that you want to research further. So this will be just the basics, but it might give you a little bit of an idea about what commercial property is and as an investment, how it differs from residential.
So let's start with the absolute basics. And for those who don't know, discover what is commercial property. So it sounds obvious, but it's where the occupier is a business rather than an individual. So for example, this could be offices, retail, so shops, factories, warehouses, but things like hospitals as well, leisure facilities, wherever. If it's not an individual and it's some form of business or organisation, then the chances are it's commercial property. We'll talk about commercial property in general, but of course an office is going to be different from a factory or a hospital, so please bear that in mind as we run through this.
So that's what commercial property is. Why does it come up in discussion? Why do we get asked about it, our thoughts on it a fair bit? Well, there are a few reasons that make commercial property seem quite attractive compared to residential. The reasons why it looks attractive are mainly to do with the lease that you sign. So with residential property, you'll normally sign an agreement for 6 or 12 months. Then if the same tenant ends up staying for a few years, you'll consider that you're doing pretty well and you count yourself lucky. With commercial property, leases are longer. They could easily be 10 or 20 years. The occupier will often invest heavily in fitting the property out. So they'll take it off you as a shell. And then if it's a fast food joint, for example, they'll fit out the whole kitchen and the counter and everything else. So it's expensive for them to move. That's why they want a long lease. As part of that lease, there'll often be rent reviews built in. So we often talk about if you've got a good tenant, should you increase the rent? None of those worries with commercial property because you often get rent reviews built in and they're upward only. So you can have something in there, whereas like every year the rent goes up either in line with inflation or in line with something else. So that's pretty great as well. And also these leases are what's called fully repairing and insuring, which means that the tenant has to take care of all the maintenance along the way and then give the property back to you in the same condition as they got it. So none of those phone calls telling you that something's gone wrong and needs to be fixed. It's the tenant's responsibility to sort all that out. So that's sounding pretty attractive, and it is if you want something really, really hands-off, because once you've got a tenant in there, a decade can go by when you don't have to do very much at all. You know that you're not going to get any call-outs to fix anything, and you know that your rental income stream is protected. So if you want an investment that's very hands-off, commercial property is going to sound very attractive to you. But of course, wherever there are advantages, they tend to come with disadvantages.
Absolutely, of course there are, because if there weren't, every one of us would be doing commercial property. So why does some people, including ourselves currently, rule it out? Well, first of all, yields tend to be lower. So this is the flip side of it being easy and reliable, is that the big gains just simply aren't there. So you will have that reliability, but you're going to have to accept a smaller yield. Demand isn't as sure as well. So you rarely get a residential property that will lie empty for years and years, but it can happen with shops and offices if the demand just isn't there. You'll always see office space in cities advertised as being available, and sometimes you can walk past an advert a year later and it's still there in major cities as well. So that does happen. So once you've got someone in, great, they could be there for a very long time, but also your void periods could be very long also. And this really comes back to this next point. And for me, the next point is what stops me investing in commercial property currently. And it's dependent on the wider economy. Everyone needs somewhere to live. It's a basic need. You know, as Maslow says, shelter, it's a basic human need. But when the economy is bad, this market, the commercial market, is particularly affected because businesses can collapse. People don't disappear in a recession, but businesses do. So if they collapse or just even downsize, they may need to move out their premises. It can really hit the commercial sector of property very hard. Really, you could look at this and say, well, the opportunity in commercial property is just after a crash. Where we are now in the market, is this a time? Possibly. There's still probably some legs in it. But certainly after the crash is the better time to look at it. When there's a boom happening, it's probably the worst time to get into commercial property. Please bear in mind, I'm far from an expert. This is just my beliefs on the industry and why I've never stepped in and done anything. But it's because if it's reliance on the economy, that's what makes me nervous about commercial property. And of course, it's a liquid. You know, you could say the same about residential property as well, but it stands for commercial property too. So the yields are lower, demand isn't as sure, and it's dependent on the wider economy. They're really the big disadvantages and why people who do residential rather than commercial. However, there are plenty of people who listen to the podcast who have done and do solely do commercial property and do very well out of it because of the advantages we previously mentioned.
And there's a few different ways of doing it. One way that some people get into commercial property is through mixed use schemes. So in some areas, it's easier to get planning for schemes that have got a commercial element than purely residential. So, for example, you might have a retail unit with a couple of flats above it or something like that. There can be big profits in schemes like that, and it's quite a nice kind of way in because there's that familiar residential component, but then there's a commercial unit as part of that as well. And on the Property Geek podcast recently, I interviewed Phil Stewardson, who's a prolific investor in Birmingham who does lots of these mixed-use schemes. I'm going to link to my interview with him in the show notes, which are at thepropertyhub.net/commercial, because that's really relevant to this discussion, and lots of the pros and the cons that we've talked about get brought up in that as well. Whether it's mixed use or whether it's purely commercial, an advantage of holding it directly is that it can be held as part of your pension within a SIP, unlike residential property. So for that reason, it's quite common for small business owners to buy their premises within their pension and then lease them back to their company. And obviously, if you do that, as long as your business is strong, you don't have to worry about some of the demand-related issues that we talked about earlier. So you can own commercial property directly, and because you can have it as part of a SIP, that's quite an attractive thing for some people to do. But you can also own it in a couple of other ways. So one is through a fund. And a fund is going to be a vehicle that owns shares in hundreds of different commercial properties to spread the risk. So rather than having that one office building that might end up sitting empty if the economy is going through bad times, you've got exposure to hundreds of different properties. So you've got that spread. And these funds deliver a yield as well as capital growth, of course. So both those components are in there. The disadvantage of that, apart from the lack of control and everything else, is that you obviously can't leverage shares in the same way as you would if you own a property directly. A third way, and a kind of a more abstracted way to own commercial property, is through a real estate investment trust. Rather than investing directly in the properties themselves, these real estate investment trusts invest in the shares of companies in the property sector, like developers and hotel chains. The results from these tend to be more volatile, but then the potential gains are bigger. So like Rob was talking about with the cycle, if you can get in at the right time, these can be very profitable, but they can also be big losses if things aren't going in the right direction. Also, these tend to have a very low yield. So it's all about the capital growth with these. So it doesn't have to be directly. That's probably the type that most of us are going to be familiar with. Most of us are going to be interested in, frankly, but then there are other ways as well.
So is it something you should do? Well, being able to hold it in your pension is a big plus. It really is. And there can be great profits in mixed-use developments, as Rob's already said. And also once you've got your own tenant, or if your own business is a tenant, it's very, very reliable and a low-effort income stream. But it's a very different asset class from resi property, and you need to really understand the risk profile and what drives demand. And really, location is everything. I think it's an easy win if you own your own business and where you're located, the business space doesn't cost a fortune. So, for example, RMP Property is based in central London. I'm not going to be buying office space there anytime soon because I haven't got a spare 5 to 10 million. But if I was somewhere like, I don't know, Liverpool or Manchester, I may buy my own office space and have RMP rent it from my pension. So there are definitely advantages if you own your own business and you currently rent and you're looking at your own premises. That could be an easy win. But going into it on a bigger level and just doing commercial investments as your main investment route, that's a much bigger decision. And today's podcast really will only give you the basics for you to start investigating that. It's not enough to make a decision, I don't believe. But fortunately, via email over the last few years, we've had many people say, listen, Rob, if you want to do a commercial episode, then we are happy to contribute to that because we're experts on it. So we will do more advanced commercial episodes in the future. So listen out for those. But this is just to whet your appetite. Let you start to think about it and decide, is this for you? It may be that this episode makes you realise, yeah, actually I've never done it and I still don't want to. It's not for me. But it may be the opposite and go, this might be worth more investigation. So listen out to the podcast in future and make sure you get over to the Property Hub as well, where we'll continue this discussion. The links, as we said, will all be in the show notes.
Okay, so I hope you found that useful. Something else that you might find useful is the resource of the week. And this week, we've got a recommendation that comes in from Darren Beale. Thank you so much, Darren, for submitting this. We love it when people suggest resources of the week. If you've got a useful tool, please do throw it our way. We've done 117 of these. Are we going to run out at some point? I don't know. But this one is called scribblemaps.com. And what Darren says is that this is really useful because it's a way of getting up an online map, just like Google Maps, but it also gives you tools that you can use to mark that map up. So if you're looking at a new investment area, for example, then you can actually sort of mark it up when you're researching and like highlight different areas, have some arrows and notes and things like that. Could also be useful if you're doing a development to map it out a little bit. I'm a firm user of Google Maps. I must use it about 50 times a day, but there are sometimes times when I want to sort of make some notes on there for myself. And so Scribble Maps could be a really useful option for doing that.
Yeah, it's not one I've used, but having a quick look at it and quick play around, it looks really useful. So make sure you bookmark it, save it for later, and then when you have a chance, play around because it's really useful. Thank you very much, Darren, for sending that through. Don't worry, Rob, I've got plenty of resources up my sleeve for the future, some interesting ones and some Trello linked ones, actually. Oh, there you go. I've got an excited 5% of our audience who are Trello nuts like ourselves. Listen out for that one. I might bring that one in the next few weeks. So once again, it's time for our reviews, and thank you so much to everyone who continues to send these in. It really, really makes us happy when we read a positive review. It really brightens up our day, and this week is no exception. And it's from Jane Owen, someone you may know from the podcast previously. We've talked about her. She reviews books over at the Property Bookshop. Make sure you check that website out. Again, we'll actually link to it in the show notes, but she's not linked to it in a review, so this is not trying to get a mention. It's just a very kind review. And Jane says, I was rather late in discovering the Property Podcast, but now that I have it, it's become one of only two that I've continued to subscribe to, the other being Property Geek. Rob and Rob regularly accompany me in the car. I live on the coast in a rural village in Wales, and it takes about half an hour to get anywhere. Perfect for an episode of the Property Podcast. I almost drove off the road when I heard my own mentioned on the 100th episode. What a shock, but in a good way. I was ever so chuffed. The other half and myself have been in property for a few years, but this podcast is a fantastic way of keeping up with what's happening, as well as the excellent and responsible source of information for new investors. The information style is perfect. Keep up the good work. It's all very well appreciated, and thank you for your time and effort putting it together. Wow. That's great. Thank you, Jane, so much for that review. Really do appreciate it. And if anybody else would like to leave a review, just go to the website. You'll see a link for reviews. We'll send you straight over to iTunes and you can leave your own there.
Yeah, we love it when you submit reviews. We love it when you submit resources of the week. And we also love it when you submit episode ideas. And next week is going to be one of those. Listener Andy Norman said he wanted to see an episode on reviewing your portfolio. So this was quite a beginnery kind of episode. So like if you're just getting started out in commercial property. But what if you've already got a property portfolio? How do you benchmark that over time? How do you track its performance? We're going to be diving in a bit more detail next week into the kind of the measures and the techniques that you can use to do exactly that. So if you've got your own suggestion for an episode, please do send it our way. Also, quick reminder that last week we talked about progress journals in the Property Hub. And thank you to the people who've been our brave pioneers and started their own progress journal. Rob and I have both done so. You can go over there and read ours. And you could also read the other people who've started theirs, give them some encouragement, give them some ideas, and consider starting your own as well. That's something that we launched last week that we're very excited about. It's all in the forum, and you'll find it at thepropertyhub.net/forum.
So that's episode 117. Thank you for being part of it. Thank you for joining us again. And next week, as Rob says, we've got a really good episode coming up, so hopefully you'll enjoy that. Hopefully this has given you a taste of commercial property today. And as we said, we'll go into more detail in further episodes. So as we keep saying, plenty more topics to cover. We've got a whole list of them we want to do. So exciting weeks and months ahead. But they'll come by in time. But for now, enjoy the rest of your week. We'll be back in 1 week's time with another podcast. Thank you. Bye-bye.
Bye-bye.
Thanks for listening to The Property Podcast. Make sure you join our mailing list at thepropertypodcast.com.
And remember, we love 5-star reviews. Rob even loves them more than air miles.